Bitcoin rip roaring higher. Look at Bitcoin breaking out with a cup and handle formation, the most bullish chart formation you can get. Here's the cup, here's the handle, and here's the breakout. Bitcoin's at 91,000 right now. It's going to go to 130,000 really, really quickly. What's up? I'm Chris Rowe. Today is November 14th, Thursday, and this is Sector Edge. Let's first look at the dollar. So the US dollar index, dollar sign DXY on Thinkorswim. And you can see that we drew a downtrend line. So let's go to a 1-year chart. Well, let's actually go to a 3-year chart and then zoom in. So let's look at a 3-year chart, zooming in here. We took this high, and each one of these bars represents a full week. We took this high, we connected it out to this high, extended that further to this one, this one, this one, this one, this one. Lots of testing of this downtrend line. Lots of times where the dollar ran up against the downtrend line and then fell back. So it's acting as a very strong resistance level. And with Trump now in office and the House of Representatives is Republican, the Senate is Republican, you kind of have a pure play right now. And the market does not like indecision. That indecision is finally behind us. And as we've been saying all week, we're kind of doing a sector watch all week. What happens right after a presidential election is likely what's going to happen for the next couple of years. So we focus very heavily on sector activity. It means more now than it ever does. Look at the US dollar index breaking out. Typically, I'd like to point out that the US dollar index has an inverse pressure on commodities and commodity stocks. Now, it doesn't mean that that's always the case. You might remember a few years back, the US dollar was rallying and we still had inflation. Even with the US dollar rallying, we had most commodities moving higher. So commodities were in a bull market, even though the US dollar was rallying. Typically, it's not something that you see. Typically, as the dollar moves lower, that causes prices to go up. Commodity prices are mostly priced in the US dollar. Basically, that means that if Japan... Oops, sorry about that. It's 9:30. I'm recording this right now at 9:30. Basically, if Japan wants to buy oil, they have to first convert into US dollars and then buy oil. When they sell out of their oil, they sell into US dollars and then they convert back to yen. So because commodities are priced in the US dollar, typically if the US dollar is in decline, it puts upward pressure on commodity prices. It's not always the case, and that's my point. You can see that wasn't the case back here. So I don't want you to just assume that just because the US dollar is breaking out, that means that inflation can't happen. But we are looking at GLD, which is gold, and you can see the safe haven of gold is no longer appealing. Precious metals in general. Let's look at GDX, which is the gold miners, GDX. You can see there was an uptrend line very similar to gold itself, the yellow metal, but it has broken below that, and it did so right after the election. Gold got absolutely smashed. So GDX, which is gold stocks, companies in the business of gold. GDXJ, of course, is the junior gold miners. I'm encouraging everybody to kind of steer clear of gold, steer clear of precious metals. It was among the worst performing sectors, along with semiconductors, surprisingly. I'm not going to say the same thing on every one of these calls, so I'm not going to dive into semiconductors, but let's take a look again at Bitcoin, BTC. You got a nice big breakout there. So the world is concerned about inflation. I don't know if they're going to go to Bitcoin for that reason. I just think that they're going into Bitcoin. It doesn't really matter why they're going into Bitcoin. But generally speaking, I think that it's pretty well known that Bitcoin is ultimately going to be a major currency. It's just a digital currency. Who knows if they're going to be, how adopted it's going to be by the government, but you can see that it's already being adopted by governments across the globe. Bitcoin now off to an all-time high. You want to have some exposure in Bitcoin. What happens if they do something crazy with the currency? Currencies drop, Bitcoin would double or triple in a very short amount of time. All right, so looking at Bitcoin, looking at GDX, looking at GLD, and looking at the US dollar. It's showing US dollar breaking out. It's showing GDX and GLD breaking down. Let's take a quick look at the sectors. This is our sector bell curve. I'm not going to get into what it all means. All you need to know right now is if it's blue, the sector has demand and control, and if it's red, supply is in control. And this doesn't change very easily. They don't flip from blue to red or red to blue very easily. So when it does, it's a big deal. This is something that should be respected. It's not something that's super sensitive that changes every day. It's something, well, because there's 45 groups that we focus on, it might seem like it does change every day, but there's not a lot of changes. It doesn't change as frequently as you might think. It's not like a heat map that you look and the Standard & Poor's website, and every single day it looks very different. This gradually moves. It's like a cruise ship as opposed to a speedboat. You want to respect what this says. If it's all blue, demand is in control of all the sectors of the stock market. There's 41 sectors of the U.S. stock market, and the other 4 are international groups. So when this is all blue, forget it. You're not going to stop that. That's a bull market. You do not want to be bearish. You don't even want to hedge with bearish positions. But you do want to look at it when it's not all blue and you are in a bull market and you are breaking highs. A market kind of like now, you want to take a close look at what is red. If you look at what is red, you have defensive sectors are largely red, which is telling you that investors are not as interested in defensive sectors. They're not as interested in safe havens. They don't want safety. It's a risk-on market. So if you look, utilities are broken into 2 groups, utility gas, utility electric. Both are red. If you look, precious metals, of course, red, and precious metals is ranked number 44 out of 45. I'm going to zoom in here. See that? 44 out of 45. So almost dead last in terms of relative strength. A lot of international groups. China is red, Latin America is red, and Europe is red. So 3 out of the 4 international groups have supply and control. So you can also basically consider that out of all the red groups, 3 of them are not even U.S. stock market groups. And we just covered a few of them that are safe haven groups, precious metals and utilities. We also have some other ones that are red. We have drugs, we have alternative energy, which kind of makes sense now that we have a completely Republican White House. Protection, safety equipment, red. Okay, that's a disappointment because I love those stocks. Axon almost went up 80% or something like that in a few weeks. Telecom, and so on and so on. With the U.S. dollar exploding, and you see these other international groups red, that kind of makes sense. Healthcare remains the number 1 strongest sector. You see that even if you don't pay for any of our stuff, even if you haven't given us your email address, it's still going to be on the logged out page. Healthcare, number 1 strongest sector. All right, I think that's it. So this has been Sector Edge. I hope you're enjoying it. Every single day this week we're putting this out. We are on Sector Watch because we just had the presidential election. Whatever the sectors do now, you want to pay close attention to and consider that for the next 2 years of your trading. I'm Chris Rose, the Sector Edge. I'll see you tomorrow.